Focus on Ports, brought to you by Transnet National Ports Authority.
Welcome back. We've been chatting to Nico Walters, who's General Manager of Strategy at TNPA, and from our Cape Town Bureau, Peter Major, who's a mining consultant at Cadiz Corporate Solutions, joins our conversation as well. Before the break, we discussed the scale of South Africa's mining sector and the National Ports Authority's plans in accommodating its rapid growth. How exactly is this all going to be funded? Well, let's delve into further conversation, Nico, and that's the question, because the latest set of financials for the year ended 2012 showed gearing sitting at about 42%. You've set a threshold of 50%, saying that you're not looking at breaching that. And you've already managed to raise a bit through commercial paper bonds, domestic bonds, and the French Development Bank as well. The funding way moving forward.
Look, the funding obviously happens through Transnet as the corporate office, because Transnet as one company would go out to source funding for the market demand strategy as a whole. I think the point that I want to share with the viewers is that Transnet National Ports Authority within the Transnet stable is a regulated entity. So what we have to do on an annual basis is we have to approach the ports regulator, and we share with the ports regulator all of our investment plans, the cost of that investment, the anticipated volumes, and then we propose to the regulator the tariffs that we would like to charge for the commodities moving through the ports. And then the regulator would grant us a tariff adjustment if the regulator believes that, based on what we've presented, we would deserve a tariff adjustment. We obviously didn't get one this year because the regulator has obviously looked at what we've asked and decided that he should approach it from a different perspective. But you're right in talking about the gearing. We do set certain thresholds for gearing. That gearing is determined, and as TNPA we have a number for the year, and we would stay close to that number as far as possible, because when the loans are made, then TNPA obviously gets their share of the loans and we invest accordingly. Our investment for this year is about 2.5 billion, and we are quite sure that we'll manage to spend that. But that is a small number if you start looking at that investment into the next few years. From next year, the next financial year, 14-15, for the next 6 years after this year, we will probably spend around an average of 8 billion rand per year. And that is why it's important that the company and the ports remain efficient, because it's only with efficiency that we would be able to sustain volumes that would be able to help us to invest in the ports.
Peter, what kind of investment opportunity are you seeing here? Because we've had the IDC saying that about $93 billion a year is needed to build infrastructure in sub-Saharan Africa alone. The problem is that there's this huge funding gap, but we're looking at private sector participation coming to the fore a little bit more aggressively. So from an investor's perspective, what sense are you getting of the investment opportunity?
Look, we've been very involved with a few of the Chinese railroad companies on some of the recent tenders of PRASA and Transnet. And so Cadiz, South Africa, and definitely international train and railway companies see huge potential. When they see these numbers, it sets off lights all over, and they have come down here. We've seen there's been 8, 9 large bids going for these tenders, 8, 9 large well-proven international consortiums. So the interest is there, without a doubt. And when you say public-private partnerships, I really think that's the key here, Alicia, because then government can steer these tenders, or not the tenders, but they can actually steer the projects to where they want it to service the country most efficiently. And they can play a very big role, because they're not just handing it out 100% to someone and they have nothing to say about it, and then they find out years later it's gone the wrong direction, or someone's made money at the expense of the country or the people. So public-private partnerships, yes, they're the way to go, and government lays it out, but they play a big role all throughout the whole process. And if it's a 20-year and a 30-year project, government should be involved the whole way. And that way they're getting the infrastructure done in the areas they want it to be done under the terms they would like, but they're getting real professional companies to do that. My concern is, I don't know much about the railways, but all I've read and hear is that our railways have about 33% less kilometers than they did 20, 25, 30 years ago. So why are we having backlogs when we've cut a third of our railways out? It should be much easier to maintain the ones we've got. And yet we're still having all these bottlenecks. And we see 80% of our traffic comes on highways now, of our goods traffic, which is insane. It should be the other way around. It should be 75–80% goes on the railways. So maybe Nico can shed some light why we've fallen so far behind the last 20 years and why are the next 20 going to be so much better?
Peter, so he's throwing the ball to you, Nico. Your response?
If I may, Alicia, just one comment around the investment, and that is that apart from obviously the Transnet National Port Authority's investment, Freight Rail as the rail company in Transnet also have a significant amount that they will be investing in creating rail capacity. I think when Peter talks about rail and other capacities going into the port and why do we experience problems and not so, I think on the bulk side the rail and port systems are working fairly well, even though there might have been problems with regards to some of the capacities. I think what we do is we plan together well and we create the export capacity well, based in close cooperation with the mines and all of the other companies that are involved. I think the big shift that we've seen is the shift where we look more at containerized cargo and some of the other cargoes that's tended to move away from rail onto road. My own view is it's probably a bit of an efficiency issue as well, because it is in some cases easier to move cargo by road if it's over shorter distances. But that's not to say that as Transnet we're not doing putting a big effort in to try and get all of those commodities and containers back onto rail. And I think Freight Rail has gone a long way to create efficient and reliable services and scheduled trains on a daily basis from the different ports to get that back. And I think if all of those things start working well, then you'll see that move of other commodities coming back to rail.
Peter, just how closely have you been monitoring track records here, especially where the possibility of cost overruns has got to be a major concern for any party looking to come in?
I think the best example that we can take analogies from is our power plant construction. Because South Africa for years, this is in the 70s and 80s, I think up until the early 90s, as far as I could tell, we were the best at building these large 4,400 megawatt power plants. And we would build one after another after another. So each one we got more efficient, more cost effective at. And they were very efficient plants to run, and we were building them very efficiently. And then we fell behind because we didn't build any for probably almost 20 years. And look at the massive cost overruns. Now these plants are costing us 2.5 times, and they're years behind schedule. And I worry, is not something similar possible on the railroad side? If you're building a certain amount of railroads every year, you should be getting better and better at it. And yet, I don't know that we've built any railroads the last 20 years. I think we've cut 30% out. And so I think there is a potential for cost overruns, just because the right hand won't know what the left hand's doing, or you're bringing in a lot of new people because the experienced people are all retired or they forgot how to do it. So that is a concern to me. And even doing short ones, just getting from one mine to a power plant. We shouldn't have any coal being transported in this country on trucks. It should be conveyor belt or trains.
So Nico,
I am
when
concerned.
it comes,
can we come in on budget, or are we going to spend double what it takes? And then it makes it inefficient, and it shouldn't be.
So where those concerns are there, and I mean, Peter doesn't sit alone with those kind of concerns, when it comes to staying within budget, to what extent does it require a call for a new approach to how you do business at Transnet, and even mindset shifts, needing to take place?
Alicia, we do, and we have quite a stringent approach when it comes to spending capital. And we do quite stringent monitoring of capital projects as we take the capital project through the normal project life cycle. So I can assure yourself, Peter, and the viewers that when it comes to capital, we take things very seriously to make sure that we limit any delays and that we monitor the costs, and especially if there's an impact in terms of spending. There are a few factors I think that we should be aware of when we do get into these type of capital investments, and that is that a normal capital process will go through a number of gates. And during that process, one of the gates that could cause delays would be something like an environmental approval, where you anticipated that you'll get an approval maybe in a certain time frame, but then it does not quite happen, and then you obviously have a few delays in terms of projects. But those things we do manage well because we do speak to the cities, we do speak to the departments to make sure that we have everybody on board when we start these big developments. Transnet as a capital investing company, if you look at what we've achieved last year, we have actually increased capital spending. I think the challenge remains for us to make sure that we create and spend the capital where it's needed, and that we keep on tracking with everybody involved to make sure that we don't have the delays. Because what is crucial to the country is not only to create that capacity at ports or on the rail side, but together with that capacity, there are a lot of social benefits that investment will bring to the country, which is much needed if you look at the current situation through the world.
Well, let's leave it there, gentlemen. Thanks so much for having joined me today. And that's all that we have time for this afternoon. Of course, Nico Walters is the GM of Strategy at Transnet National Ports Authority. And Peter Major, of course, from Cadiz joined us from our studios in Cape Town. Remember, if you have any comments, queries or suggestions, you can email us at ports@abn360.com. From me and the team, it's goodbye.